Hello, I'm Tim Winter, Portfolio Manager for the Gabelli Utilities Fund and longtime utility analyst. I want to spend a couple of minutes talking about the pending power surge in the US and across the world. Artificial intelligence and AI-driven technology are advancing at an almost exponential pace. Computer graphics processing can process ever more data at ever greater speeds and require increasing power intensity. The hyperscalers, the Amazons of the world, the Metas, the Alphabets, they need more, they need bigger, and they need more power intense data centers. These data centers are becoming huge. At the same time, electric utility vehicles and electric vehicle charging stations are growing in use. As we highlight in our Gabelli team research white paper, AI plus EV, can utilities generate enough power? The U.S. power network has been caught somewhat off guard. U.S. electric demand is on the verge of a structural, long-term acceleration. After a decade more of flat growth, many utilities are raising their sales forecasts. AI data centers are the biggest driver, but it's also electrification, onshoring, and Bitcoin mining. The supply-demand situation was already causing concern due to the ongoing retirement of baseload coal plants and being replaced with intermittent wind and solar. In December of 2023, the North American Electric Reliability Council raised concern that the growing electric demand and the planned retirement of 83 gigawatts of fossil fuel plants create reliability issues and could lead to some blackouts across the U.S. The surprising surplus demand could strain an already aging electric network, resulting in higher power prices and some regional power supply shortages. To meet expectations, the utility sector needs significant infrastructure investment. These dynamics create a long-term favorable investment environment for electric utility stocks, for non-regulated power players, for infrastructure builders, and for equipment suppliers. The growing load benefits regulated utilities because it leads to earnings per share growth through sales growth, through rate-based growth, and it also improves affordability. In the non-regulated power markets, a handful of merchant power companies benefit from selling power at higher power prices. Hyperscalers want reliable power, but they also want zero carbon power, which means the big renewable developers can add wind, solar, and battery storage and enhanced margins. Finally, the build-out of transmission and the distribution network leads to earnings per share growth for the regulated utilities. Nearly all electric utilities benefit from these trends. So investors looking to play the AI theme might want to consider the neglected electric utility sector, because powering this new economy begins with the nation's electric utilities.